There have been recent warnings from the RBA, the Treasurer, even the barefoot investor has expressed concerns about crypto. One thing is becoming clear, and that's that regulation is coming. In this video, we're going to have a look at what's in the pipeline, but also how it's likely to affect crypto markets. The Treasurer has just announced that there will be a review into the financial payment system in Australia. Josh Frydenburg is setting the scene to usher in what is said that will be the most significant reforms in 25 years. Consultation into what the changes will involve is set to begin in early 2022. So we don't know for sure just yet exactly what it's going to look like. I guess we probably won't know until later in the year when the changes are legislated. They have set out an agenda and we'll come to that later. But what we do know for sure is that changes are indeed coming. For a long time, the government was pretty quiet on crypto. I guess they were adopting a bit of a wait and see approach to see whether mass adoption would take hold or whether it would essentially peter out. Well, crypto has become quite a large asset class by anyone's measure, with some estimates predicting that as many as 25% of Australians have dabbled in crypto. So from a government's perspective, the time for wait and see is gone and the time to act is now. We've been hearing more from the RBA Governor Philip Lowe around the risks of investing in crypto. Some of it may be signalling about what regulation might be coming down the pipeline. Some of it might also be a bit of self-protection in that they can't be accused of saying that they didn't warn you. And then last week we had the big announcement from the Treasurer saying that there will be a reform into the financial payment system in Australia, including crypto. So what we do know now is that the regulatory cogs are indeed starting to slowly turn. Now, we always knew that this day was going to come. The question is now, will they seek to regulate in a way that will allow the industry to prosper, or will they regulate the industry within an inch of its life with a real purpose of stamping it out? To look at it another way, will they regulate to protect the consumer, or will they regulate to protect the established financial system? Of course, you can do both. It's a matter of striking the right balance. The thing here is, governments are not about to roll over and let a decentralized currency that they have no control over come in and grow to a point where they perceive there is a risk to the financial system and they perceive that it is a viable alternative to the government-controlled fiat currency system. That's just not going to happen. They will not let that happen. So if crypto is going to have a future, you have to expect that there will be some regulation that goes with that. Now, regulation can be a dirty word, especially to the more libertarian investors, and it definitely does go against what the developers had in mind when, say, Bitcoin was first created. The whole idea that it was supposed to be a decentralized currency that no government could control. It was in the people's hands. But regulation doesn't have to be a bad thing. It can actually be a good thing, provided they strike the right balance. And there is some risk in that. For instance, in Japan, where there have been questions over whether onerous government regulation has stifled innovation and driven up the cost for investors. But my guess is that they won't over-regulate, not at this point in time anyway. Crypto isn't going anywhere and they want to promote Australia as a bit of a tech hub where it is innovation friendly and people can come here to create new companies and build the fintech industry. But also, if they clamp down too heavily, they risk driving crypto underground, and they don't want that. I suspect they will look to regulate in a kind of a Goldilocks fashion where the regulation is not too hot and not too cold. The announcement by the Treasurer does come at a pretty good time. Just in the last week, 2 Australian exchanges have gone into liquidation, that being My Crypto Wallet and ACX. People have been unable to trade and unable to access their funds for withdrawal, so this really does provide a pretty strong example why some further consumer protections would be warranted. Right, so what will the reform agenda actually look like? Well, as said at the top of the video, it's going out into consultation at the beginning of next year, but we do have some clues as to what they want to look at. So what we have here is a licensing framework for digital currencies and exchanges. This would likely involve registering with ASIC and higher reporting and auditing obligations that will go with it. There will probably be greater protections and security for investors. They want to look at the issue of debanking, where banks sometimes restrict services to people and businesses that are involved in crypto due to the opaqueness around what the transactions relate to. Treasury will be working with the RBA to pilot a retail central bank digital currency. Now that is a digital government-backed currency that is available to the general public. even though that they've previously stated that the case for an Aussie CBDC was weak. They're also looking at creating a wholesale central bank digital currency, and this will be used to settle transactions between the banks. They also want to look at the buy now, pay later sector. This is companies like Afterpay. So basically, these kinds of companies up until now have not been regulated because they don't charge interest as such. They charge fees, late fees. So they want to introduce fairer fees, more competitive offerings, higher standards of credit checks, and to bring regulation in line with credit card companies. They want to look at anti-money laundering and also the tax treatment of cryptos. So should we be worried? Well, not necessarily, but we will have to wait and see how things play out. The reforms will likely bring greater clarity. It will take crypto out of the shadows, out of the legal grey zone, and this was always coming, so industry really has no choice but to embrace it. It should help to legitimize and provide a more stable footing for future development and innovation. With the greater certainty, it should make it easier to attract capital and more funding from institutional bodies. This will help to wean out the dodgy operators, so that means less exchanges going bust. It should also increase consumer protections and provide proper oversight on how investors' funds are stored and how they are protected from loss. All this sounds pretty good, doesn't it? But it does also mean that there will potentially be higher costs for the consumers. That is because extra governance, extra regulation, all the licenses will have a cost to it, and these costs will likely be passed on to the consumer in the form of higher transaction fees. So it's important that they get the balance right here. They don't want to over-regulate to a point where it becomes too costly, where it's too difficult and too onerous for startups to get a leg up. They do want to promote innovation in the sector. They do want to promote innovation and development in Australia. If it becomes too over-regulated, it means that instead of businesses setting up here, they're going to go offshore to jurisdictions that are more crypto-friendly, and the government doesn't want that either. I'll also note quickly that there is opposition to country-specific plans such as this from the IMF. The IMF supports a more international approach, as you would expect, but really, I can't see it being a very easy task at all to get a whole bunch of countries to find consensus on this. There will always be countries that want to do it their own way. So it is interesting times ahead for sure. Anyway guys, thanks a lot for watching. If you want to see more, please subscribe. If you learned or enjoyed anything about this video, please hit the like button. That would be much appreciated. Other than that, thanks again for watching, and we will see you in the next one.